Hey guys, welcome to the Forex Market Research video. In today's video I will talk about the results I have testing euro dollar with unified Gartleys, setting two targets and having an active trade management. Okay, so the trading plan for that backtest looks this way. The pair is euro dollar, time frame was 60, sorry, it is a mistake here. Okay, the algorithm is 45.5 pips, so it is very simple algorithm. Basically, it looks this way. If we have a movement and the opposite movement reaches the 45.5 pips, then we have a swing to the downside. Until then, the upside movement continues. So it ignores everything that is less than 45.5 pips. Patterns is the unified Gartley. This time I isolated the patterns. In majority of my videos you may remember that I was backtesting unified Gartleys and ciphers together. They are my favorite patterns, but in this backtest I isolated one pattern. I will do the similar one for ciphers. Okay, the entry was simple. Limit order, initial stop loss was 1 plus 5%, so another mistake here. 5% above XA, and then we have some management. It is reduced by half when half of risk reach. It means that you calculate the distance from your entry to your stop loss and define how much risk you have. Let's say 50 pips, and when you have 25 pips in profit, then you reduce your risk by 25 pips, and when you have 50 pips in profit, then you close half of your position, then you reduce your risk by another 25 pips to get break even, and that's it. You have your second half running. So the targets are described this way: close half when 1-to-1 risk to reward reached, and close another half when 2-to-1 risk to reward reached. Okay, so in my Excel, where is that euro dollar? I will open euro USD, and then I will go. The backtest was done by the MPS5 pattern recognition software. It draws patterns on history absolutely objectively, so no need to try to guess if the pattern was correct or not, or something of that kind. So absolutely automatic. So let me go to the settings and I will show you how it was. The pip distance is the algorithm, and the value of that algorithm was 45.5 pips. Okay, so we have it this way, and switch to daily, of course, and disable ciphers and only enable custom Gartleys. Okay, this is the algorithm from group 2. In group 1 we have different algorithm. Of course you set them all in settings, and when you switch here you have the ones that you set in settings. Okay, so it looks this way, and as you might have noticed, here we have some additional arrows added. So this is the arrow label price, another label price, and so on and so forth. So what it is this range that I was talking about. This is the risk distance. So basically 1-to-1 is the first target, and 2-to-1 is the second target. Okay, and also we have some additional, which are halves. So when price moves half, you place initial stop loss here, and when it moves another half, then you break even it. And there is some problem, as I noticed, because of moving your stop loss closer, moving your stops tight. Those stops are hit very often. So suppose of this situation that you hit your entry and you execute it with a limit order. Well, I didn't pay any attention to warning signs. Warning signs improve the accuracy of the strategy. If you use warning signs, they are giving you some tips that the pattern may not work, the warning signs, and there are 4 of them large expansion bar, gaps, tail closes, and steeper angle. So you should keep them all in mind. But when I was doing this back test, I was not paying attention to warning signs. I was executing absolutely mechanically. So if price came to this entry level, then the execution was done. Of course, if the pattern was not invalidated, and there are some invalidation rules for that pattern as well. Okay, so we had a bounce to this 0.5 to half, and we move our stop loss from here to here, yes, according to the rules. So we'll have it this way. And price can do either of these three things. It can reverse and go hit your stop loss and go further, yes, and you are lucky that you cut your loss. Instead of full loss, you had that partial loss. It can go further and hit your take profit, so you do the break even of that trading position, yes, close half, and blah blah blah, the rest. And one of the most frustrating things that price goes, hits your stop loss here, and then it reverses and goes to first target, second target, or whatever. And this is the question you need to answer, if it makes any sense to do that cut lossing. Maybe you are cutting your winners mostly rather than losses. Maybe this. So this is the question you need to answer, and we will ask this question analyzing the Excel spreadsheet results. And to compare my Excel spreadsheet that I have now with my previous Excel spreadsheet that was done with exactly the same algorithm, with exactly the same patterns, but with a different money management, with no money management actually, with no cutting losses, with nothing of that cut, simply set and forget to the first target. And what we had was this. Maybe you remember from my previous video. I've done it for euro dollar, dollar yen, and pound dollar. So we'll take the euro dollar part to compare to Excel spreadsheets. So I'll go to copy this, and I go back to my current Excel spreadsheet, simply paste it here, and I will close it. What is it? Okay, so the chart, we don't need this chart. The only thing we need to do, I suppose, is to level the number of trades. So we have 455 here, and we have 658 here, basically because of ciphers, because this Excel spreadsheet shows ciphers and unified godlets. As I treat them the same, they mostly have the same accuracy, they mostly have the same outcome, so I can simply delete the part of it. Okay, like this. So we have identical number here and identical number there, and as I know that the distribution between wins and losses is absolutely random, so it doesn't matter what part of my trading I delete. I can delete the beginning of it, I can delete the middle part of it. It doesn't affect very much the strategy, so I just deleted the end of this Excel spreadsheet. Okay, so what numbers we have? We have 56% probability, and we have 43% loss. We have 33.8, almost 34 win, 37 loss, and 0.9 is the average risk to reward. So the most important numbers are this expectancy, 2.79 pips, and 0.07, it means 7%, 7.5% of what you're risking you get in each and every trade. And the profit factor is another important what is it, item, let me put it this way. So it tells you that you have a return of $1.17 on each and every dollar spent as a stop loss. So if you lose $1 as a stop loss, you have 1.17 back. Okay, so if we look at the first target here, we will have similar results, but with some minor difference. the win probability is 49%, 49.45. Basically you should treat them as 50-50, because the 3% buffer is a statistical error. So if they do not differ more than by 3%, then they actually should be treated this way. And the same situation here, we have 35.74 winners and 64.25 losses. Basically I treat them as 33 to 66 to get that 1/3 here, 2/3 here. So the correlation is 1/3 of winners, 2/3 of losses. You win only 1 out of 3 trades, and here you 1 win, 1 lose. This is the first target, this is the second target. Okay, but because you have that average risk to reward grade 1.19 and 2.32, you have the expectancy much greater, not that much greater, but you have 0.08 if compared to 0.07. So in a long term, in a long run, this strategy performs better, although you have a less probability of hitting the win. Okay, and this is because of risk to reward. And if you compare the second target, of course there is no comparison here. Obviously the second target performs, gives much better results. And this is something that I want you to pay attention. You should change your mind from thinking as ordinary man, from thinking as those beginners or whatever, and start thinking as a professional. Okay, so what professionals do? They do very basic thing. They are cutting losses and they are letting winners run. So this is thing. Of course, when you cut your loss, you're moving your stop loss closer to your entry. Yes, you're cutting your risk, and whatever market noise may hit your stop loss and you're out of your position, and this results in a larger number of losses overall, and you have worse worse win probability. And now imagine that you are a public person, that you have a very good reputation on, let's say, TradingView or whatever. You are posting a chart, yes, and you post the chart and it is a loss. You post another chart and it is a loss. You post another chart and it is a loss. Just compare these two. So the gold one is the second target, yes, and the blue one is the first target. So obviously, let's say you are a professional trader and you trade the methodology that is the gold one, yes, and you generate huge amount of money. But your statistics say that you only win 1 out of 3. And if you post something on TradingView according to your strategy, yes, basically you post something that wins 1, then you post something that loses, and you post something that loses 1 more time. And now look at this from the perspective of your follower. When a follower follows you and he gets an idea from you to buy here, to buy there, he doesn't know anything about your strategy, yes, he doesn't know how your strategy looks like in the long run, and he gets let's say a failed signal, wrong signal, yes, he gets another wrong signal, and then he gets a true signal, and then another 2 wrong signals, then he has true signal. Because majority of followers, they are simply looking for signals. Nobody wants to do that kind of market research that I'm doing here, that I'm performing here, and showing you how to do that. I'm trying to motivate you to do that hard work. This Excel spreadsheet took me 3 days to accomplish, and I was working about 12 hours a day, and I was hardly posting anything in my live trading chat room, and I just switched to high time frames like 4 hours to place a trade, and not to play as a day trader but rather as a swing trader, leaving positions overnight, and that's why my live trading chat room became a bit more quiet. Because we have less trading setups. Okay, simply I'm working hard on this, and doing the backtest with this very algorithm that I discovered. And if you watch my previous videos on swings, I calculated that the average swing of euro dollar is this, of pound dollar is this, and dollar yen is something else. And I also calculated the average impulse and average correction. Okay, so you should keep it in mind that a newcomer in this industry, in trading industry, he thinks if a trader is a professional trader, if he generates money, if he's living off trading, then he can predict every turn of the market. Then he is almost 100% right. Then he is a guru who tells you something and he is correct. But in reality, it is not. Professional traders are wrong in more times than they are correct. In majority of times, professional traders are wrong. And I have received so many hating comments in my trading view. Stop posting these bullshit patterns, they don't work. Stop posting this blah blah blah, stop posting this. Of course it is kind of comments like this. Simply they come from newbies, they come from somebody who doesn't have any idea of what is it to generate money for a living. Basically, majority of professional traders, they have somewhere around 50%. But the greatest traders that I can remember, for example, the Richard Dennis, he had only 29% of winners. But if he has a winner, his winner was enormous, and his losses were small losses, and great winner that overweights all his losses. So look at this. I will simply delete this. So you see, so this is a professional trader's equity curve. Maybe not with this drawdowns. The drawdowns here are huge because I didn't do any filtering and I didn't apply any rules to for time trading. And now I will show you something. First of all, let's go here. The Excel spreadsheet, it looks at first glance, it looks much better because you have that 56% of winners, almost 60, and basically what you take, the trade that you take has a higher probability of win. You don't expect that trade to lose. Okay, and this is appealing to newbies, but in the long run it does not give you as many profits as it seems to give. So let's calculate the number of winners here, and they are already calculated. They are 256. And let us calculate the number of winners here. We have 230. Yes, so we just go and calculate 230, and the difference between these winners, yes, you should assume that these strategies are identical. The only difference is the active trade management. So the difference between them is this. It equals first number of winners minus second number of winners. So the difference between them is 26 winners. You see that? It is 26 winners. And obviously I have 26 winners less because I was moving my stop loss. This was that situation when 26 times I hit half, then I hit my stop loss, and then I went to win at least to the first target. Yes, so 26 times was that situation met. You see this? 26 times. And now let's calculate how often actually I did that cutting my loss operation, how often I did it. So let me insert a helping column here. What we have here, we have initial risk that is typed as for 5-digit broker. Yes, you know that we have 5 digits, but the last decimal is not the pip, so 5-digit broker, and then it is converted into our actual pips, basically divided by 10. So we will need to keep this in mind in our calculations. Okay, so how do I know that this one is cutting my loss? Basically, I will compare first. It should be a loss, yes, and when it is a loss, I compare it with my previous initial risk, and if my loss is smaller than this initial risk, yes, then it means that I cut that loss. So I will be comparing this cell and this cell. If they are identical, then I have full stop loss. If it is smaller, if we have some changes, then I have cutting my loss. And the formula is very, very simple, at least something that I can think of. And it should be this. It equals, all formulas in Excel start from equals. If this cell, so I check this cell, is more than 0, then type nothing, type 0. Simply just have this initial thing. Else, when you say else, it means that it is something different from that more than 0. Basically, I have only two flags here, either more than 0 or less than 0. Else, in else situation, if it is less than 0, if the ABS, it is an absolute model number, it means that minus 14.5, and here we don't have any minus, yes, so the minus 14.5 will be treated as simply 14.5, and 14.5 without minus will also be treated as 14.5. So the ABS, not the best, but ABS, the absolute number, returns the absolute value. Okay, the absolute of this number is less than initial risk, then obviously we have cutting loss, then type 1. If it does not this, if it is not this, then type 0. Then type 0. And I suppose that's it. So let me check it. If it is more than 0, then skip, type 0. If it is less than 0, then check if it is less. So if it is less, then type 1, and else, if it equals, type 0 once again. So it will only type in zeros and ones. So what I will do, I stretch it to the downside, and you see it fills all these columns with this similar strategy. Okay, we have 1 here, so let us go here and see minus 12.6, and total risk was 25, so it works okay. If we check it here, minus 22.9, and total risk was 45. Okay, so it only calculates how many times we cut our risk. Now let me calculate the total of them, and it is very simple, and the total says 76. So the sum of these cells is 76. Of course, every time we cut our loss, we count as 1, yes, and if we calculate them together, we have 76. So the total times how many times we did our cutting loss is 76. Okay, so now let us find how many times we prevented ourselves from losses, and the number is very simple. So the total times of cutting loss minus those times that we were actually cutting our winners, yes, and it says that in 50 times we cut our loss, and 26 times we cut our wins. You see? Okay, and now let's calculate some percent numbers, because they are more visual for me at least. So the 26 divided 70, it is this, and this equals 50 divided 70, it is this, and I will format that, and I will go to here and here. So in basically only 1/3 was preventing the win, and 2/3 we were preventing a larger loss. So it makes a very great sense of cutting your loss, because in 2 out of 3 situations, after you hit here and when you came back to reach this level, in 2 out of 3 there is a 65% probability that you will have a larger loss rather than reverse to go there. You may create a strategy around this. When it gives you this setup and then it goes here, you have a 65% probability of price to move from here to here rather than to your first target. Of course, the risk to reward in this case would be awful, but maybe this would be your risk, this is your reward. So you have 65% probability to have a larger loss rather than reverse. So it makes very great sense to cut your losses in this situation. Just close your position because odds are in favor of moving further. Okay, and now let's examine another thing. We will further analyze our trading simply without any filtering. I noticed this impact of news events, and basically the news events impact is very interesting. So I'll just simply switch to my MetaTrader. Suppose we have this pattern and the news event impact is this. That's it. You have a stop loss. So there is a great idea, simply don't place any trades before the news event, or delete your limit orders when news events are about to be announced. So because the news event is something that moves the market so far, so in that direction that maybe you have those losses. So what is the news events? Here it is. The major news events are this. It is 15:30 in Moscow time, and it is 8:30 New York time. And of course you should convert it into your time, but I am concentrated on 15:30. Well, it varies from summer to winter, 16:30. Sometimes we have it 16:30 because we don't have daylight saving time shift, and it is always 8:30 in New York. This is the major news event release that affects at least this euro-dollar pair, because dollar is very connected with American news. Okay, so there is a good idea. Let me show it to you. Okay, this is the pattern, something like this. Yes, suppose we have one candle closing and we have second candle that hits the stop loss. The news event on this candle, for example, and this is a consequent candle. So basically 1 hour after news event, the news event itself, and 1 hour after it. So what I will do, I will filter all my trades that executed at 3 p.m. and I will also filter all the trades that executed at 4 p.m. Basically it means that you don't trade within this window. So your last trade should be executed at 2 p.m. and your next trade should be executed not earlier than 5 p.m. Moscow time, of course. You should convert that into your local time to get your understanding. Okay, so from 3, don't trade at 3 p.m. and don't trade at 4 p.m. Okay, here are my ideas. Now let us check if my ideas are correct or not. And how we will check this? Of course, we will use this additional column here. And what we need to do first, we need to subtract the time from this daytime column. Okay, how do we subtract that? It is very simple. It equals this date time, and we will subtract the integer part of it, cell. Okay, and we have this number. Don't be afraid. This number is time number. What you need to do, you need to go and change this general into time. Okay, and what you have, we have 19. So you see 19,000, 19,000. So if I copy this to all the cells below, like this, double click on that, I will have them substituted and formatted at the same time. And Excel is a very smart program. I love working and analyzing large data with Excel. It does it very fast. Okay, so what we are looking at, we are looking at this. We go to filter here, yes, and it is very simple. Simply select and show me only those that were executed at 3 p.m. 3 p.m. is 15, and 4 p.m. that is 16. Yes. Okay, now I have result column here and result column here. So what I will do, I will choose all the results here, and the total sum of these results will tell me if it makes sense trading it. The total sum of these results. So what is the total sum? The total sum is minus 734 pips. Okay, this is target number 1. Let's go to the target number 2. So what total result says is minus 740. Okay, it is 3 pips better. So it is a very good sign for me. Simply don't trade it. Alex, do not trade this. Never trade that stuff during news events. Okay, what I will do, I will simply go here, choose them all, and I will delete that stuff. Now all these rows will be deleted in a second. Okay, then I will undo the filter. Okay, and you see some of these cells, they are not calculating correct. Okay, so let me restore the formulas within these cells. Maybe I need to restore this one. Okay, now we have a different picture here. Okay, what is the result? The amount of winners increased. We have 52% probability and 47. Now the difference between them is more than 5%, more than 3%. So it means that 52 is greater than 50. It cannot be rounded as in previous result. And here we have 39% of that. Okay, 0.16 expectancy. If you remember that the expectancy here was 0.7, yes, so it is a very great improvement. We also have drawdown that is much less than was previously. Previous drawdown was about 600. I will undo the changes, and you will remember what was previously. So let me show you the final numbers here. So 1884 generated with first target and 2915 with the second target. And let's go to the chart. So you see it became much smooth. This drawdown is not that much and is not that great. Simply don't trade during news events. There is no sophisticated techniques. Placing limit orders and doing that, cutting your loss, and avoid news hours. That's it. No sophisticated. Of course, you can apply that warning sign filter, and maybe when you have a warning sign, you should go and execute your strategy at market with the help of reversal bar or some kind of candlestick formations. They can improve your trading overall. But I'm talking about some basic stuff that you don't need anything else. You don't need to learn anything else. You don't need to learn additional entry techniques or strategies. Simply avoid trading during those hours of news events. Okay, now let me undo the changes. So you see that? I will undo it here. We have this result. I will undo the results here. Okay, now we should undo the filter. It is thinking right now, and it appears here. Then we go undo the time. Now we have everything back, I suppose. Okay, there are the calculations. Okay, here it is. Okay, now we have it this way, 0.5. Let me save it for now. So we have it the way it was originally. And if you are interested, back to the chart. So we have it. The blue one is almost sideways. Not the sideways, but the amount it generates if compared to the red one. By the way, the gold one generated 22.40. After the improvement it generated 29 something, yes, and the blue one generated 11.49, and after the improvement it generated 18.49. So 700 pips was lost if you were trading during the news events. Okay, I'll do this. So of course it looks much better. It is only in comparison that it looks that bad. Yes, it is looking almost sideways, but when you don't have that gold, it looks much better. Okay, here are the results, and here is the thing that you should keep in mind. Oh, by the way, here is the spread also. In my result, it calculates the spread. Whatever loss you have, it is increased by one spread, and whatever take profit you have, it is increased by one spread. And you should keep this in mind, that spread has an enormous influence on your strategy. So let me put it this way. I just simply type it as 0, and we have it this way, and nothing actually changes, but what changes is the average risk to reward, because your winners became greater and your losses became smaller, and it affects the expectancy, yes, of course, and it affects the overall numbers for this. So let me calculate the overall numbers. The spread adds, I'll do it this way. I'll just copy, I'll just go here, and I will, oh come on, what is it? I need to format cells as numbers. No, it didn't work. Ah, okay, now I understand what is. Insert formulas. So I'll do that. We'll go back. What I need to do is to copy. No, not this one. Copy them, and then paste only numbers. So we have numbers here, yes. And when I undo the changes, so I add spread, you see the impact that spread has. This is very big problem with this spread, because previously when I was a bit younger and I paid no attention to that spread, and I was calculating the results, and with the Excel spreadsheets that are having this small expectancy of 0.02, 0.03 or whatever, the expectancy, if you have that kind of expectancy, it means that your strategy is not working. But I was thinking, oh, I have a positive expectancy and it's okay. But what you have in reality, the spread deletes all your targets, deletes all your winners. So you just saw it, that the expectancy of 0.08 turns into expectancy of 0.12 or 0.11, yes, 0.10. So the 0.02 expectancy is absolutely nothing, because the spread will take it all. So your expectancy should not be less than 0.02. Okay, now you just imagine this 300 pip difference here, and also 300 pip difference here. It is only spread of 0.7. If you have spread of 2 pips, it is turns into even worse. Look at this expectancy of 0.03. If your spread is 2 pips on euro dollar. And of course, guys, there is another thing that I advocate for missing news events. It is 1 hour time frame, hourly time frame. So news event impacts the hourly time frame as well. It is not only for 5 minute, 15 minute or intraday, hourly time frame. Okay, that during the news event the spread is widened. Majority of traders widen the spread during news event. They try to kick out as many traders out of their positions as possible, because the news events can lead to unexpected results, and no broker wants to have negative accounts with their customers, because when you have a negative account during news event, you may have it. During news event, you just may have no price to execute your stop loss, and some traders don't use a stop loss, so the broker may have no time to close your position at the margin call, and that's why you can have that kind of huge slippage, which leads to a negative account. Basically, when you have a negative account and this thing occurs, this is not your fault. This is the fault of your broker, because your broker could not close your positions due to the margin call, and basically it's not your fault, and you shouldn't pay to your broker, of course. And that's why brokers try to prevent themselves from this disastrous things. They are widening the stops during major news events, and they are widening the stops just few seconds before the market close on Friday, because the gap during the weekend on Monday, the gap may lead to the to that kind of margin calls, or may lead to missing price to execute that trading positions. Okay, so nobody wants to pay you his own money. That's why broker is thinking about his survival. He's widening the spread, and while widening the spread, he is closing your position earlier, maybe bid price, or if you are selling something. I will show you the picture. Here's the pattern, yes? Here's your stop loss. And the stop loss actually is a buy order, because you are selling. A stop loss is a buy order, but it is only executed when ask price is hit. So the ask price is the to quoted price. It is the price for buying, and it is higher than the bid price. And what is drawn in your chart is the bid price. Yes, and you may never have bid price touching your stop loss, but the stop loss executed. Why is that? Because the ask price executed your stop. So it may be this kind of situation when you leave your pattern here, it was executed maybe, yes, and it is here, and your stop loss executed. Why is it so? Because of news events, and your ask price goes very much higher than your bid price to get you out from this position, or this widening the stop may happen just before the closing of the market in Friday evening, Friday night, yes, just before markets close. It may happen as well. So widening the stop. Oh, it also widens not only in this direction of an ask price, it also widens in the direction of a bid price. So basically it turns into something of this kind. Both an ask price becomes higher and the bid price becomes lower. So the broker does this to trigger as many stop losses, to trigger to close as many positions as possible before the before going to vacation or before going to a weekend, or just before the news. It is very simple. And the solution to this problem is absolutely simple. Don't trade during news event, and don't close your positions. Don't trade over weekend, and also trade very small fractions of your account. So even if you have a disastrous gap, if your position is closed and you don't have any positions over weekend, then this gap does not affect anyhow. Doesn't affect you anyhow. Okay, this is for 1 hour. A 4 hour is slightly different. It is a bit larger time frame, and sometimes it makes sense to keep positions over the weekend, and the spread actually doesn't affect the 4 hour time frames that much because of larger movements on 4 hour time frame. Okay, let me set my spread to initial one, 0.7. It is the one that I have. Okay, 0.7. It is my average spread, but it is floating, of course. Of course, it is floating as usual with brokers. Well, now that's it, guys. Hope you find this video useful. I will add it into the Forex Market Research playlist, and you can also watch the videos from that playlist. Somewhere to the right you will have that switch to these videos. If you are interested in my software, you are welcome to visit my website www.ps-software.net. I will hit the link in the description. The software draws the patterns according to your settings, according to your algorithms, and according to your preferences. It has some predefined groups as advanced patterns, something of this kind. Yes, you can switch them on and off. It has also harmonic patterns. They are predefined, and the one that I'm using here in this video is this custom pattern. And if you're interested in my custom pattern settings, it is something that has this B point and this C point, this completion and this invalidation. Very interesting pattern that I called a unified lottery. So look how it works. This is very good demonstration to show you only one winning pattern and say look how it works. And of course you can switch between different algorithms. Those you even have a manual one, something of this kind. Look how it works. Oh, you can draw it this way. Look how it works. Well, I'm mismatching the highs and lows, but it doesn't matter. Okay, now let's go back to the algorithm that I had. And also this is very interesting function that I have. This is my software is the only one that has it. I've never seen in other. So look at this. You just stop it. For example, this is hourly, and you go to what? To 15 minutes to execute this. You see what happens? Nothing happens. You have exactly the same, and you say, oh, look at this head and shoulders pattern. I will execute the head and shoulders, and on the break of this line you have extra confirmation of decline. So, and of course if it is on, it will calculate patterns according to 15-minute information. So let's go to, let's say, Forex price extreme. So you see patterns became smaller, and on hourly they became larger. Okay, that's it. If you're interested, click the link in the description. As for the Excel spreadsheet, I will share the link to this Excel spreadsheet in description as well, so you can click it and you can watch all these numbers and watch all these charts, examine them, and hope they improve your trading. So one more time, 2 tips here. First of all, cutting losses. You are basically cutting losses. 2 times you cut your loss and 1 time you cut your win. So it means that when you cut your losses, you are improving your strategy. Second thing is trading during news events. So if you trade when in that hours that news events are released, and the hour before after that, you are having more losses. You are having more losses, at least with euro-dollar 1 hour. This is the second tip that we have based on our market research. Second conclusion. Well, that's it. If you find this video useful, give me a thumbs up, share this video on social media, type your comments below. Don't forget to subscribe to be notified about my new episodes. And until then, I wish you good luck.